We are back in the strategy session. Let's get you caught up on some of the other headlines that are making news today. General Electric, still the parent company of this network, about down 5%. Lower industrial equipment sales and a contraction in GE Capital putting some pressure on revenues. Technology stocks have been holding on to gains thanks to three bullish headlines that came out last night. AMD and, of course, Google beat on earnings. And Seagate Technology said it had been approached by third parties about going private. And another lousy week for IPOs. One, NetSpend, was pulled, while the other two, Body Central and Tower International, priced below the range. You weren't here last Friday, but we were looking forward to this NetSpend, supposedly a sort of a bellwether deal, if you will, growth company. I mean, we're just not seeing these things get done.
For right now, postponed due to some technicalities, I believe, related to the prospectus, some issues in terms of one of the relationships, not postponed because of
lack of demand.
Lack of demand. You know, that's what they say today.
Right.
But you know, and we discussed it yesterday with Scott Sperling. Despite this move in the stock market in September, the demand for initial public offerings just is not there. And a lot of it, I think, David, has to do with the fact that the market moved up, as many people have pointed out. There was this high correlation. It was really ETF and index fund driven during the month of September as opposed to individual stock selection. There was some data out earlier this week about how there was really not even any net new money that went into the stock market in the month of September. It was essentially trading between funds of ETFs that drove the indices higher.
Right.
And so, you know, the big GM IPO, which is going to hopefully price, I think the companies come out
Probably
and say
early November.
It's going to be very, very interesting to see if the demand is there, if the price has to be cut, if the deal has to be shrunk, or if the deal itself gets postponed, because there is a lot of anticipation on that deal being priced.
There's no doubt there is. Of course, pricing is everything. I mean, it won't get, you know, if you price the deal somewhere, there's a buyer.
Correct. But all the pricings that we've seen to date have been below the lower end of the range, as opposed to even the deals that came out and traded high, they were even priced at the midpoint of the range.
No, you know what? I mean, while there may not be a lot of vibrancy in the new issue market for stocks, well, that's certainly not the case for ETFs. The appetite for ETFs, well, that appears, and Gary was just referring to this, appears to know no boundaries. In fact, today, BlackRock unveiling new changes to its semiconductor ETF. Darek Wagner is the head of iShares Product Research and Development. He joins us from the NASDAQ market site, where that ETF will now list. And Gary has been so interested in this very issue that I'm going to let him ask the first question.
Well, Darek, the issue really has to do with actively managed ETFs as opposed to passive index-like ETFs. So explain, this was an existing ETF, but you actively managed it in some respect and changed what were the names, what were the companies within the index, true?
Gary, thank you for having me. So it wasn't an existing ETF. It was an iShares that has been in existence for several years. But we are at BlackRock, and particularly at iShares, very much focused on serving our clients according to what they ask for. And our investors and investors that are interested in semiconductor industry have been for a very long time following the Philadelphia Semiconductor Index, the index that NASDAQ has changed as of last December, rebalancing to make it possible to make an investment company that would invest in those securities. So here at iShares, we have changed this semiconductor ETF to now, as of today, be linked to the Philadelphia Semiconductor Index, and it became iShares Philadelphia SOX Semiconductor Sector Index Fund.
But the stocks that make up this index, is there any active management on your part or BlackRock's part, or are you just simply taking what the Philadelphia index puts in there and then just giving investors a way to participate in those shares at a certain weight? Where is the sort of subjective analysis being done at the ETF level?
Well, this is a index-based fund, so this is a passively managed portfolio which follows the Philadelphia Semiconductor Index. Our portfolio managers, make no mistake, pay very close attention. Index management is actually quite complex on many levels because it's very important to make sure that all the stocks and all the rebalances that are made in the index are appropriately reflected in the fund, and we're very proud at iShares to have a good team to look.
You know, Dark, there's a lot of complexity, it would seem, as we've learned here in strategy session, in part thanks to some work from Herb Greenberg when it comes to ETFs. But we've also talked a lot about whether ETFs are changing the overall character of the stock market. Do you believe that's the case, given how popular they are and how heavily traded they are, that they have really changed the nature of the overall stock market?
They do not change the nature of the market. However, I completely agree with your point that ETFs are very popular. As a matter of fact, if you look at data as of July, ETFs trading represented about 28% of total dollar trading volume on U.S. markets. And when you put it in perspective, it's a substantial number. If you were to eliminate that, you would say that perhaps...
But why is that necessarily a good thing when 28% of the volume is now ETF trading?
Well, it is because it's very good for investors, both institutions as well as the private investors using their advisors. They can construct more efficient portfolios. The fact that the securities are so available results in far more efficiency, something that was not available to a private wealth investor working with their advisors several years ago is available to them today efficiently.
Mr. Wagner, thank you for being with us. Appreciate it.
Thank you for having me.
You're welcome. Head of iShares Product Research and Development at BlackRock. All right, as we tend you to break here, what do we got? Can we show you Bank America or JP Morgan? Yeah, they're coming. I can tell you right now, down about 4.37%. How's that for some specificity on Bank America? We are back on the strategy session right after this.